Do you want more consistency in your trading? Then you should probably use the daily and the weekly charts to find your support and resistance levels. I'm going to show you how you can do that in this video. So we're talking about the daily, the weekly chart. We're talking about currency strength. We're adding everything together, and I'm going to show you why I follow the weekly chart and the daily chart to find those key support and resistance levels. I also do use other tools as well, like volume analysis and things like that, but I'm not going to do that in today's video. I'm just going to show you simply why you should be following these higher time frames, zones, and how you can use them effectively in your trading. So why do we follow those high areas, higher time frame areas? Well, it's really simple. It's because it takes more effort to move the markets on these type of time frames, right? So if you see areas where the market has come into and moved away from, it's got to hold some kind of level. It's got to hold some kind of importance to the traders that trade in this particular market. Now, if I was just to show you and say simply to you, where would you want to get into the market just by looking at this chart, looking at the hindsight of where price has been in the past? You would always point out the turning points. You'd point out this high, you'd point out this low, you'd point out these highs in here, for instance, you'd point out all these lows. The reason why you're naturally driven towards these areas is because you can see sharp moves away from these points. So you know in your head automatically that, well, I want to be in at this particular position because the market has sold off from that point, and I know that if I was to risk a certain amount here, then I could potentially make a certain amount here. That's why your eye is naturally drawn to these positions. So I always like to look at the highs and lows and then try and look back in the past as well to see how the market has reacted, and then we see how price reacts to that point. Price isn't always going to react as we expect. You can see here the market sold off from this particular point. I would have made a note of that level in the past and said, well, I want to see how price reacts here again, because what we may see is price fall from that point. It didn't on this occasion. Price went straight through it. So then you look for the next level of significance in the market. Now, I also like to kind of use things that have happened more recently, just because I know that the market more recently has been affected by that particular price. So for instance, if we look at Kiwi yen here, why am I interested in Kiwi yen? Well, I can see that price came up into this level of resistance and reacted. We had a rejection in there. Now, I'm pointing Kiwi yen out to you because there could be an opportunity to see price come to a level of support. That support is driven by this weekly level of support. So you can see here at 86.14, I've placed a level of support. The reason why I've placed my support level in here is because of how price reacted to that point. I could probably make it a little bit more tighter, and we can do that by going down a level. So if I went to the daily chart, for instance, what I want to do is notice where the sort of closes and the opens are. I also then want to make a note of the sort of wicks. So I'm creating a zone around this area. So around about the 86.10 level would be fair to say. And then what I do is grab a rectangle tool and I'll just basically go across and mark out that level. So what I'm trying to build here is a picture of where buyers have been involved in the past. If a market is coming to that level, I'll then want to set some alerts around that zone. So I'm going to add an alert here for around about that 86.20 level. The reason being is because I want to know when price comes into this level, because one or two things are going to happen. Either the sellers that are selling in here currently are going to try and profit take at that point, which then could lead to price moving to the upside, or we're going to see the momentum of those sellers get more aggressive. They could drive price through that level, and we're going to see price potentially come to the next level of support, which would be down here towards this low. Okay, so that's one reason why you should be looking at this. I'm going to show you how it was effective recently. We can see that price formed a high here on the 29th of September. Price then drove downwards from this level. It then came back into this zone. what we can see is that sellers that were selling from this wick here have obviously got aggressive again and then driven price to the downside. So that's, to me, is an area of importance. What I like to do then is go down again. How did price react in and around that area? You can go to the 4-hour time frame. You can go even lower than that. But even on this 4-hour time frame, you can see that price came down. It then tried to retest that high and failed. That's what I would call the double top pattern, okay? And then price started to break to the downside. So I always try and identify what type of patterns are happening around these key areas of support and resistance so that I can paint a mental picture to myself that when price does this again, what am I expecting to happen? What can we see happening around that point? If I go even lower than that, there could be some other kind of patterns forming, but you can see it was just the double top. It was a simple retest of the previous highs. We then traded to the downside here, and price has been very aggressive since. So I like to follow the weekly in terms of path as well. I like to identify those higher time frame support and resistance levels because I believe that price is going to go from one to the other. So I'm believing at the moment in my head, my bias is that I think New Zealand yen is going to come down into this level of support. The reason why is because we've got multiple technical factors, but we also have a potential reason from a currency strength point of view. I know, and I've been tracking that the New Zealand dollar has been losing strength recently. So I want to look around to see, is there any opportunities to potentially take advantage of that? Kiwi yen could be one of those. We have high data releases this week, high impact data releases, and lots of them. Typically in that type of market environment, the yen can gain some strength because the market wants to move more towards a risk off environment. Risk off means that the yen tends to strengthen. So I like the idea of trading Kiwi against the yen because of the strength and weakness. I've come to the chart. I can see that I've got support down here at 86. So I'm then going to try and think, well, if the weekly chart is going to be moving down to that point, I should see a trend develop on the lower time frames, including lower lows and lower highs. Is that developing here on the daily? Is that developing here on the 4-hour time frame? I can say that yes, it is. Price is creating lower lows and lower highs, and at this current moment in time, price is stuck within a minor range. So if I want to be short this range, it makes sense again, identify that level where sellers have been in the past, so that if price comes to it again, do we get a similar setup? If we don't, we don't, okay? Our bias is then needs to change. But I can see here right now, if I was just to kind of look at this area in here, I'd say to myself, well, I'm going to identify this wick high there because I know that sellers have got involved in here, okay? So to me, if price makes it back to that point, that is more like a high probability area for me that we could expect a potential continuation of this downward move. Can I add more confluences in? Of course, we can add things like trend lines. You can add things in like, you know, Fibonacci retracements, anything like that that adds a little bit more confluence, you can do that. You can add volume analysis in here as well. I'm a big fan of volume analysis. So you could add some volume analysis in there to try and gauge how price is reacting to that point. So we'll see. I'm going to set an alert around about 87.80 here, and what I'm going to look for is that if price drives into this level of resistance, can we find resistance and can price trade down towards that 86 area? If price breaches this level, I know that maybe something different is happening at that point, and I have to change my bias then. I have to reevaluate the strength and weakness. I have to reevaluate potential fundamentals in the market to then gauge what this particular market could do. To gauge even if I want to be involved in this market, okay, and that's very important. So I'm going to leave it there. Thanks for watching this video. If you did enjoy it, subscribe to the channel. We've got loads more Forex trading content here that you can enjoy. Cheers.